So today we're back here with Jim Schmidt, and we're going to be talking a little bit more about lending and the aspect of how much it takes, to put down to purchase a home. Still getting a lot of questions about, how much does it really take to purchase a home, down payments, percentages. So we'll get right into it with Jim.
Great, thanks, Matt. It's really funny that even though it's really talked about a lot, there's still a ton of people that think you need 20% to put down on a home when you're buying a new home. And it's not the fact. As we've talked before in different sessions, you can get as little as 3% or 3.5% and still buy a home. But one of the most important things to remember is if you're putting down less than 20%, you're going to have private mortgage insurance as well.
Yeah, and I think with PMI, it's definitely an interesting topic, and I think we should talk more about it because PMI to a lot of buyers is like a big black cloud that hangs over your payment, and people think it's just going to crush you financially on a monthly basis. So let's talk about PMI real quick and see, learn a little bit more about it.
So first thing to know what PMI is, right? So private mortgage insurance, or PMI, is really insurance that protects the lender. It doesn't do anything for the buyer, but it protects the lender because the buyer's putting down less than 20%.
Yeah.
So if something were to happen and the buyer stopped paying the mortgage or went into foreclosure, it protects the lender.
Yeah.
So just know that up front. It's not something that protects you, it protects the lender.
Yeah.
But what it does do, the biggest pro of having PMI is you don't have to save 20% to put down on a house. So you'll get in sooner and you'll get in with less money.
Yeah.
And for example, you have a $300,000 house, $60,000 you would need for 20% down. Well, that's not needed anymore. You could put down as little as 3% and end up with the house and being in the house. It's a great product.
Yeah, I mean it's definitely unbelievable to be able to not have to put down a huge lump sum and then instead have a smaller additional payment on top of the monthly payment to cover the PMI. I think it's super relevant, especially like I was talking to Jim just before this. I said, I had a client come to me and say, I put down actually, about 5 to 10%, but I still had to pay that PMI. And this was like 2 to 3 years ago. So a lot of you out there who purchased, say, 3-4 years ago when maybe you got your houses for less and, you had to pay that PMI on a monthly basis, there are options now, that I believe you could get rid of PMI.
Absolutely. Well, let me first tell you how you pay PMI, right? So there's a couple of different ways to pay it. Number one, and the most common way with conventional mortgages, is you pay monthly. So you have your principal and interest, your taxes and your insurance, and then they add on a small amount for private mortgage insurance. That stays on your loan until you reach 20% equity in the house. Then it can be canceled. The other way you can pay it, though, which is not known to a lot of people, is you can pay that PMI premium up front at closing. So instead of paying $150 a month for a couple of years, you can pay one lump sum up front and have no monthly payments on your mortgage. So that's another one. Third way to do it is a combination of both. You can pay some money up front and then a smaller amount every month. So look at it as there's plenty of ways to skin the cat here on PMI. It doesn't have to be a dreaded thing. It's a good thing for most buyers.
Yeah, especially if you don't have the big amount of money to put down on your first home or anything like that.
Right. And the key is, people usually say, so how do I get rid of PMI? Well, there's a couple of ways to do that too. It automatically, on conventional financing, goes away when you reach 22% equity. It automatically stops. However, if you pay more every month, if you add improvements to your house and increase the value, you can request to your lender that they remove it sooner. And quite honestly, it's just a small effort of getting an appraisal done and be sure that you make your monthly payments on time all the time. Because if you don't, they can refuse the option of removing PMI. But it's a simple way to get rid of it, and you can do that anytime during the process.
So I think that, with PMI, it gives people the option definitely to be able to afford that home if they don't have the big amount of money to put down. But there are options for you that have PMI that don't necessarily want it anymore, that feel that your home is worth the extra value to warrant getting rid of it. So if you guys have any other questions for myself or Jim on PMI, feel free to reach out, and we'll catch you guys on the next one. Thanks.
Thank you.